Me.
Yeah.
You're live.
Oh, I am? Am I live?
Yes, you're live.
Oh my god, I didn't know that. Let's go. Give me a break. Give me a break. Break me off a piece of that lower rate. Give me a break. Give me a break. Break me off a piece of that lower rate. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. If it's your first time tuning in, do me a huge favor. Hit that like or subscribe button so you are notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 9 p.m. and we post content daily on TikTok and Instagram. So don't forget to follow us on our other platforms. Also, if tonight's video brings you any value, please like the video and share it with someone else you know that would like it as well. So tonight, we're going to talk about why are mortgage interest rates coming down and why are the feds so upset. Also, if you are a first-time home buyer, they just made some changes to the rules where first-time home buyers using a conventional loan can get a lower interest rate. I think you guys caught me off guard on my phone messaging and everything, and the camera was on. My bad. What's going on, guys? Hopefully, you guys are having a great night tonight. So, as you guys know, on Thursday last week, inflation report came out, and it came in lower than expected, 7.7%. Stock market rally. And of course, as you guys know, mortgage interest rates started dipping. We went from 7.5, 7.25 to 6.5. I haven't seen something dip that hard in a long time. Of course, as prices have pulled back the last 60, 90 to 120 days with the lower rate, hopefully a lot of you guys were able to increase your buying power or get a payment that's more suitable. I know some of you guys are, I need prices to drop more. Guess what? You are not alone. With rates coming down, with the way the market reacted, the Federal Reserve is not so happy. Check this out. The empire strikes back on lower mortgage rates. The Fed Governor Waller makes it clear that lower mortgage rates won't be tolerated. So the Federal Reserve is so upset that mortgage rates are dipping, right? Where do you stand? Do you want mortgage interest rates to come down to make mortgage payments cheaper, or do you want mortgage rates to go up, which will make mortgage payments more expensive and drive buyers out? If you drive buyer out, prices will come down. But if prices come down and buyers are gone, why are they gone in the first place? Because mortgage payments are too high. And of course, some people don't want to believe this. It's like, this guy is just selling something. If prices dip to a certain extent, cash buyers will come into the market and buy these properties. Don't forget, we have about 750,000 homes listed on the market for sale. We don't even have 1 million homes. Yes, it jumped from 730 in the month of September to 750 in the month of October. So 20,000 more listings are available on the market for sale. But if you look at the data on the Federal Reserve economic data, in 2020, we had about 1.2 million listings on the market. All right. Of course, as rates pulled back down, that 1.2 turned into a couple 100,000. So as you guys know, with rates staying up, more and more listings will hit the market and less people will buy. But we're not getting as many listings as people want. And that's why the feds are so upset. If inflation starts coming down, and as we know, what's it called? I'm going blank here. Facebook just let go of 11,000 people. Amazon is about to let go of their own 10 to 15,000 people. So more companies are letting go of more employees. So in the next couple of months, we are going to see a surge in unemployment. The thing we don't know is that who is going to get unemployed that actually has a home, that has a mortgage interest rate over 4%, or over 5 or 6%. Most likely those people will probably sell because renting will be cheaper. But if you got a mortgage interest rate under 4%, which 65% of homes with mortgages in the United States, according to Freddie Mac, have mortgage interest rates under 4%, even if they get laid off, probably going to hold on their home, right? Moving would be too expensive. Staying would be cheaper, and we don't know when they're going to get the jobs back. So with all that being said, it's going to be really hard to see interest rates skyrocket. Not saying that they can't, but so far, inflation is trickling down and unemployment is trickling up. These are two signs that will bring down rates. The only thing left holding interest rates or holding the economy or holding interest rates from coming down is inflation. And one thing holding inflation from really coming down is energy. And I'm talking about oil, okay? So, for some freakish reason, if the Ukraine and Russia war ends, or the United States figure out how to bring more oil or bring down the price, bring down the price of oil, that will bring down inflation. And if that happens, what the unemployment, we can see rates pulling back. And if rates pull back, even in this economy right now, there's enough buyers in the market, right? Even in this economy, I'm telling you guys right now, over the weekend, when rates went from 7.5, 7.25 to 6.5, more and more buyers, stuck their heads out. So because you watch What's a Mortgage and not the whole United States, you might be able to jump on a deal before sellers realize and other people realize, hey, are rates down? If sellers knew rates were down, say goodbye to your 2-1 buy down. Say goodbye to your renovation. Say goodbye to closing costs. Of course, if you don't qualify, chill out. But this is why the Federal Reserve is so upset. They're like, we can't tolerate these low interest rates, because if low interest rates come in, they know prices will push back up. Of course, a lot of you trolls who do watch, oh, see, this market is weak. The market is only weak because interest rates are up. There is a demand that's there. And there doesn't need to be a big demand because we only have 750,000 active listings. Remember, new construction, even though there's 8 months supply, out of 461,000, only 50,000 homes are completed. Okay, and the feds know this, and that's why they're getting so upset that why is everyone reacting? Like a little good news, all of a sudden everyone wants to celebrate. Because everyone's celebrating, that's the reason why mortgage rates are dipping, and we'll see how long that goes. Okay, so now that we know that rates are dipping because inflation is down, as unemployment picks up and inflation keeps pushing down, the feds will eventually have to pivot. And once they pivot, mortgage interest rates will come down even more. Will we see 3 or 4s? I don't think so. We're going to be in a very bad position if we saw 3s and 4s because there's just not enough active listings, okay? And I think the feds are going to do everything they can to keep hiking rates. In December, the first week of December, there is another rate hike coming up in about 2 to 3 weeks. And I think they're going to go 0.5% to 0.75%. If you go 0.75%, rates should go up a bit. 0.5%, that's what they're projecting. Rates should stay the same or kind of cool down. Unless any noise comes out with like, oh, unemployment's only at 2%. They might have to hike it even harder. Okay, but with everything on the street, the word on the street, seems like unemployment should be going up. And then January 30th, February 1st, there should be another rate hike. But if inflation comes in lower in December, which I don't think it will, if it comes in lower, you will for sure see a little bit more of a pivot. Because in January, that's when we'll probably really feel the unemployment, okay? So the feds are watching. They're not happy because prices can come down if rates keep coming down. But in the day, that's where we're at right now. Hopefully that helps you with your update on where mortgage interest rates are at. Right now, you're looking at conventional, 740 credit score or better, 5% down or more. Single family home owner occupied, 0 points. Remember, I'm not here to quote you interest rates. I'm here to give you a ballpark where interest rates are at. You're looking at 6.5 to 6 3/4 on conventional. Government loan, 6.125 to 6.375. On government loans today, in the morning, I saw some 5.875, some 6%. I don't see that many companies. That's why I don't want to announce those numbers. I like this is the average rate. But there are some companies giving some nasty low rates. And then jumbo loans. You're looking at 5 7/8 on a 30-year jumbo, 5.5 on these are all owner-occupied jumbo, right? 10% down, 740 FICO score, right? Remember, jumbo loans have no PMI. 5.5, 7-year ARM, you got 5.5. 10-1 ARM, you're sitting at 5.625, 5 3/4. It's insane right now. but rates can drop more. If it does, I think it's going to be crazy with pricing. All right, guys. So that's where we are, where interest rates are at. The Feds are not happy, but now you know why rates are low. And the Feds, they're going to do everything in their power to bring interest rates back up because they need to bring prices down, which doesn't make any sense to me. Majority of buyers that we have are finance buyers. So if you bring rates up and you drive out these finance buyers and bring prices down, you know who's waiting at the door? Warren Buffett, paying cash. Other cash buyers waiting for prices to come down. So how does that help out America? How does it help out lower, middle, and upper middle class? It doesn't. You're driving out the buyers who need the homes to live in to bring in cash investors to buy them cash or at a really low rate to rent it out, to take away home ownership from Americans. I don't know. Okay. So next one, the big news. If you are a first-time home buyer, which means you haven't owned a home in the past 3 years, FHFA, the Federal Reserve Housing Finance Authority, right? They have released something. They've released a new guidelines to conventional loans. So if you are getting a Home Ready or Home Possible, Fannie Mae or Freddie Mac, first-time home buyer program, or you've never been a homeowner, they are removing the loan level pricing adjustments. FHFA announces target pricing changes to enterprise pricing framework. The Federal Housing Finance Agency today announced target changes to Fannie Mae and Freddie Mac enterprises guaranteed fee pricing by limiting upfront fees for certain borrowers and affordable mortgage products while implementing targeted increase to upfront fees for most cash out loans. Wow, even cash out too? Woo, look at that. Okay, so first-time home buyers at or below 100% of the area median income is in most of the United States and below 120% of the AMI and high-cost areas are eligible to get your loan level pricing adjustment removed. And I'll explain that in a second. Guys, that means if you're a first-time home buyer, you're going to get a better rate because there's no risk adjustments. This is going to hit hard for people buying a home and they have a 660 to 740 credit score. Because if you have a 680 to 740 right now or under 740, you have to go FHA. Now you can go conventional. That means you don't have to refinance for your PMI to fall out, which is huge, okay? Home Ready, Home Possible loans, Fannie Mae, Freddie Mac, flagship affordable housing program, okay? HFA Advantage and HFA preferred loans, and single family loans support the duty to serve program, okay? So this is a big deal. Typically, when you buy a home with a conventional loan, there's something called loan level pricing adjustment. There's adjustments of fees. That's the reason why lenders have to give you a higher rate to absorb those fees. It's not the lender's fault. It's risk adjustments that FHFA, Fannie Mae, and Freddie Mac have assigned. So if you put 3% down on a conventional loan, they typically want to charge you 0.75% of the loan. The reason why you never see the charge, the lender increases the interest rate to cover the charge. If you have under a 740, there's even a bigger charge. So if you're going 680 to 740, typically you'll have to go with a FHA loan, which does have a lower rate, and that's why they go with it. But the PMI is permanent. What happens if you can't refinance for some reason? Right? And now you have that permanent PMI. On conventional, it falls off automatically. That's why it's going to bring more buying power to first-time home buyers and give first-time home buyers a chance to buy a home with a lower interest rate. And now also, I saw this with most cash-out loans. So it's a big difference. So they're trying to stimulate the market and get people to refinance and buy a home. Dude, refinancing. I just saw that right now. Dude, refinancing can come back big time. Okay? Especially cash-out refinancing. There are big hits to the rate. The loan level pricing adjustments, but now they're removing it. So it's a big deal. And let me show you why. Okay. So look at this loan level pricing adjustment. Check it out. And bring it up. So check this out. Right. Let me see if I can make this bigger. Is there a way to make this bigger? Can we make this jumbo size? Andy? Can we make it full screen so everyone can see this thing?
Yeah. I can move
All right, we're going to full screen this for you guys. So check this out. So when you get a loan, right? That's why you watch What's More. You get that real, and you get the truth of what's going on. Okay? Imagine you do 5% down, 3 to 5% down, or like almost 5% down, right? There's at a 740 credit score. You have a risk adjustment that's loan level pricing of 0.75, right? If you do 10% down to not 5% to 10% in a quarter. So it's a quarter, not a big deal, right? 740 FICO score, 3% down, a big deal. Think about it. On a loan that's 100 grand, that's 750 bucks. On a loan that's 400 grand, right? That's what? Almost 3 grand. So they're increasing your rate to cover that. That's why you guys don't see it a lot of times. But imagine they don't have to cover it. It makes the rate lower. So look, check this out. 720 to 739 FICO, 1%. 700 to 719, 1.5%, right? 680, 699, 1.5%. This makes it really hard with people with not amazing credit to go with the conventional loan. Yes, even though FHA loan rates are a little bit lower, but overall, you have that permanent PMI. And then you have upfront PMI, which is almost another 2%. So now, if you're a first-time home buyer and you haven't owned a home in the past 3 years, go ahead and go full screen, my face. Now, for a new homeowner, if you haven't owned a home in 3 years and your AMI, right, the area median income, where you want to buy a house, you're under 100% or under 120% in high balance areas, now you can buy it with a conventional loan, and there's no loan level pricing adjustment, which you will get a better deal, okay? So that's the two big important news that's going on right now. Number one, rates are down. If you don't qualify, you got to wait it out. There's nothing you can do about it. But just know the feds want to step in and get those rates to go up. The reason why they want the rates to go up, because they're trying to bring down prices. But if people can't afford the payment and most buyers are financed, guess who's going to step in? Cash buyers. So they're driving up rate to drive away finance buyers to bring in cash buyers to buy the property. So, of course, if you're not in a position to buy, don't buy. If you feel like I'm full of shit and that you feel like I'm just selling something, then don't listen to me. I'm just letting you know, pretty common sense. We had a 1.2 million homes in 2020. Rates went to 2%, 3%. We got about a couple 100,000 homes. Let me pull it up right now really quick for you guys, right? For those of you who's not a believer, I love people who don't believe, right? I love it. I love it. Check this shit out. Here, bring it full screen. So check this out, guys. Let's check this out, fam. So 2020, 2019, 2020, pandemic hits, right? 2019, 2020, pandemic hits. Rates are all of a sudden in the 2%. Let's say a mil, right? And they're here, 2020. Let's say a mil. Look at this. Boom. Rates drop. Boom. 440,000 homes, April 2021, right? 2000, look at this. Bam! January. 300,000 homes. Rates went back up. 700,000. So you imagine. Let's go back to January 2020, right? Pandemic kicks in. About a milli. We got a milli, right? Rates drop down. Look what happened. This is why they want to bring rates back up. Look at this. Woo! Look at that. 347,000 in February. And that stuff started creeping up, right? When they start bringing up rates. Now it's 753. So am I crazy or am I not crazy? If rates pull back down, you just saw history repeat itself, right? And during that time, pandemic, people didn't have jobs, right? The people who did bought were people with money and had jobs that it was able to withstand the COVID and withstand the stay-at-home policy, and people worked and made money and still bought homes. So that's why the feds are like, hell no, we need to bring home prices back to a specific level. But if prices keep dropping, and even though rates don't, and prices do, remember, during that era, by the way, when prices were going crazy, look it up, 24% of homes in America were bought in cash by investors. 24%. Google it. 24%. So what do you think is going to happen when prices dip and rates are up? You, me, and the rest of the normal people who put on their pants one leg at a time probably can't buy. Okay? And think about it. Check out every influencer. It's talking about buying the dip. They're waiting. You think all the Meet Kevins out there, these YouTubers, the Ryan Pineda, they're sitting on huge hedge funds picking off homes left and right. Okay, so that's number one. Number two, all you first-time home buyers out there, go talk to your lender. If you're going conventional, United Wholesale Mortgage is honoring it starting, I think, this month or next month. And most banks are going to honor these loan level pricing adjustments in January. So if you're buying new construction and you're closing in January or moving forward, you might want to go back, hey, reprice out my loan, right? I'm under the 100% AMI or under 120. You got to remove that loan level pricing adjustment only on conventionals. So if you're not closing until January, unless you're going with UWM, which I like UWM a lot. If you're working with a broker that's going through UWM, then definitely, hey man, make sure you remove that loan level pricing adjustment for me in December, right? Give me that good rate. Rates pull back and you get that, ooh, you're like, money, right? Automatically rates drop. If you're buying in January moving forward, conventional, remove that loan level pricing adjustment. If rates get lower, money, right? You buying a home, you're refinancing cash out. Call your lender, remove that loan level pricing adjustment. Money, right? It's all about money, guys. So hopefully this market update does help you out, and now you can do your best. Now you can make the best decision for you and your family, right? So hopefully that helps you out. If you have questions regarding the loan level pricing adjustment, or you need somebody to go out there and help you shop for a mortgage. So what I do, I take your scenario without running your credit, or if you haven't run your credit, we do soft mortgage credit pools, and we check it with like 50 different banks to see who's going to be able to give you the best deal if you're trying to look for a better deal, all right? So give us a call, 714-790-9697. If you guys want to call, you want to text or talk, you can call us or text us for all the shy guys and shy girls out there. If you have a loan estimate, email it over to info@whatsamortgage.com. And some of you guys are trying to download my Ultimate Mortgage Guide. I do apologize. The link on the ad is not working well. You can go to whatsamortgage.com and download our Ultimate Mortgage Guide. We have the Ultimate Mortgage Guide, VA Guide, Conventional Guide, and FHA Guide, and a Refinance Guide. So don't forget to check it out. Well, if it dropped, Eddie, this time, if it dropped to 2008, unless you are a high net worth person, you're probably going to compete against a high net worth person if prices drop that low. We printed, remember, 80% of United States currency in the past 2 years. You can look it up on the Fred as well. Okay, under M1. There's too much money printed. If prices drop to 2008, no lower class, middle class, or upper class American will get a home. If prices drop if it dropped 300 grand right now, okay? Hopefully that helps you out. I'm not saying that I can't, but if it does, good luck with it. Dude, prices dipped, or prices went up because rates were so low in the last 2 years, and guess what? People bought it cash all day long, okay? Hopefully rates can get to 4.75. All right, guys, go to some Q&A. Seems like Serge, I got a supplemental tax bill, man. Didn't expect it. Tax in Cali are killer. They act like if I had cash just sitting aside. Sergio, I completely understand. So when you buy a home that closes January to June, there's one supplemental tax bill. July to the end of the year, there's two supplemental tax bills. That is vice versa. Let me look that up again. But January, June, there's a tax bill, and then July to December, it's another tax bill. Okay, so it's either one or two. I'll look it up. If you guys do really want to know, please DM me. I'll look it up for you. So that's why I had a buyer today. They're staying loyal to their lender, right? Their closing cost was 15 grand different than this other lender I found them. 15 grand different because this other lender's a cousin. They stayed with them. I'm like, homeboy, it was a guy, right? Homeboy, bro, good luck with your supplemental tax bill. Good luck with that, right? You got to pay 15 grand more. I'd rather save that 15 grand, pay my supplemental tax bill. But that is real. So finding the best deal does matter. So you got to make sure you shop. Be loyal, but make sure your loyalty goes both ways. I mean, that lender, that realtor, they helping you out with something if you're going to be that loyal. All right, guys? Hopefully this information helps you out. I really appreciate everyone who watched, liked, and commented. Please do me a huge favor. If you are not a subscriber by now, please hit that subscribe button or notification button so you are notified every time we post new content. When will they announce 2023 FHA loan limits? It should be coming out after Thanksgiving. Typically, conventional comes out after Thanksgiving, and then a couple weeks later, government comes out. But conventional, everyone says we're probably gonna be in the 715 or higher area. High balance, we're at a milli, right? So, but if you're gonna go in the milli, might as well go jumbo, right? So hopefully that helps you out. But if loan limits go up, you're gonna bring more buyers back in the market as well. So I know people want prices to come down, but you guys understand, for prices to come down, if you're a cash buyer, you want prices to come down. Because if prices come down, that means payments are up. And if you don't believe me, run a mortgage calculator right now and check it out for yourself. Okay? Oh, what's gonna pull back? Let me know when that happens, when it pulls back, what the new payment's gonna be. You're gonna be surprised. Mortgage payments aren't gonna drop $1,000 a month. You might get a couple $100, right? But not $1,000, like thousands on thousands of dollars a month, right? I think some mortgage payments did drop 1,000 recently when rates dropped 1%. But these were the loans like in the 7, 8, 900 million bucks dropped a percent. Not if you're like in that 4, 5 to 7, it would be really hard. Okay. Any house approved first time home buyer tax credit right now, Jessica, there isn't. Even Biden was supposed to drop one for 20 grand when he became president. Never happened. Okay, I'm not. For those of you who love Biden, who bleed blue, I'm not talking smack. All I'm saying is that Biden promised a $20,000 one that did not happen, and that's the only tax credit I know about. There's supposed to be a $50,000 grant that never happened. There was the helper program that never happened. So a lot of these programs, they're in Congress. They're waiting to be signed. For some reason, these Congress people that we put in office are lollygagging, and it ain't signing, right? Hopefully that helps. Sorry about that. Hopefully that gives you some more clarity if you're waiting for tax credit. All right, guys? Thank you guys again so much. And also, please, if you like this video, please hit the like button, and please share this with someone you know it would bring them benefit. All right, guys? We want to end all our episodes with our attitude is gratitude. Without you, there is no us. So thank you so much, and have a great night.